What's going on, traders? Today we are doing some back testing, but a little bit different. We're going to do this on expert mode. Now you might be asking, what are you talking about? Well, basically I'll show you in a second. So let's hop over to the video and let's begin. Let's hop over to TradingView through TradeZella. This is the back testing feature once again, and we're just going to run through some charts. So I'll just kind of keep you along while you can kind of see what's going on. What I have here set up is essentially three different time frames. So I have the 4-hour, I have the 15, and I have the 1 minute. We're using ES because, well, in this period of time from like September until, current day in March 2025, I haven't really used or traded ES that much. So my familiarity with the nuances of these sessions will be a little bit less. But the main point is I'm using a market that is highly correlated with NASDAQ, which is what I have primarily traded for, that duration of time. The important thing to remember is the longer you trade, the more likely you are to remember specific formations, at least for me. I can see some of these trades from even months ago, and I can remember it if it's a market that I traded. Now, by choosing something that is, slightly ancillary to what I do, the idea is that I will have less ability to see the nuances. So let's just get into the charts. What I'm doing here is I'm actually going to crank this up to pretty much max speed. I'm going to go ahead and clear off any annotations. And I just want to watch how markets rotate from different time frames, as well as I want to see what they're doing in terms of structural development. So let's hop into this. Now, while I was editing this video, I was unsure about how I was going to do this point in the video. Well, we'll just go over it right here. So what I'm looking for specifically in price is I want to see what we have around us. Do we have levels above, levels below, and what do those look like across time frames? It's more than just finding an entry. It's about context. So if you want to hear a little bit about my process as to why I am doing it in this manner, it is simply because I want to be looking for setups that occur at the time that I'm going to be trading. However, I'm going to be watching how price develops. And now I get a lot of context as price is building up for hours on end, right? Hours over hours until we get to that 9:30 open for New York. I'm able to have a pretty decent read on what structure is doing as I watch it unfold that entire time. Now, this might seem very fast paced to you, but you got to remember I trade on the smaller time frames. So something like this, it's really not that fast paced. Now, once again, as a short-term trader, I'm used to being put under the pressure. So what we're seeing here is we see a potential swing point formation. Just want to make sure that we get all our annotations correct. Okay, it looks like our brush is working now. So what I'm looking at here is, I'll go ahead and show you over on the charts. I'm looking at this potential swing that formed into this fair value gap right here. We have 15 and we have an hourly. We also have this hourly change in state, right? This is a pretty potent signal. So to me, I'm thinking that we might see a rejection here based on the fact that we did, in fact, invert this fair value gap right here. I think it is very likely that this holds as a resistance level. So I can go ahead and just say, I want to be short in this area. Maybe my entry is a little more refined. I want my stop above the highs and I want to target something within reach. So now we're talking ES. So I would say 49 to 68 might be a little steep, maybe right here. We'll go with that. And then we'll just let it run. And we want to see if these things play out over and over. And the idea is that I'm going to be primarily focused on trading around my key time of day. Now this is, later in the afternoon or whatever. Not necessarily my edge, but we did see that I was able to structure a trade. And mind you, this is my first time going through all of this. I'm doing it here live with you. And we're just going to watch how price unfolds. So that's what we'll continue to do every time we reach a significant point in the day, meaning the New York Open, 10 a.m., those types of times. That's when we'll be looking to execute. But until then, it's just watching the context form. And this is exactly where traders get it wrong. They think backtesting means finding every entry and exit. No, you have a strategy. Focus on executing within the context and the confines of that. Do not think because you can find an entry at some random time of day that it's going to be repeatable. Look for things that do repeat, such as the open, such as the volatility around that, and structure your trades around there. So in a scenario like this, it shows that I did not get an initial read that was quick enough to see, obviously, this formation right here, right? I had figured that we might have been overshooting the gap based on the session tendencies that we were starting to see right here. We have the 9:30 open, right? 9:30 reversed. However, what did we do during London, right? London, in fact, formed a low of day, right? So I marked out two prices, two time levels, I'm sorry. So you got midnight open right here. We see that we kind of put in a low and then we rallied for London, right? We sweep out these highs. We're running through all of these levels right here if you look at the 15. So the likelihood of us continuing at this point is it's very rare, right? It can, of course, but the context was that we were bearish because we're rallying overnight. So I'm initially thinking, how are we going to reverse into this area? However, obviously I did not see this based on the speed of the candle. So what I would do here is literally just kind of rewind it and go a little bit more bar for bar, you know, kind of let it play out. Boom, 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 boom. You want to get to the open. We're at the open. Okay, so we see an initial push lower. None of this to me says clear price action, right? None of this. We see two equal highs. Maybe these get swept. I don't exactly remember. Or maybe there's, you know, a potential SMT that had formed at these highs with NQ. But the question is, where does an entry form? Maybe if you're a scalp, very, very short pace scalp trader, this is your trade. For me, there's no clear definitive signs. Not until we see that fair value gap, right? This one. Oh no, that's so messy. Until we see this one right here. So this is where I'd potentially be looking for an entry. It's not my favorite. So we had to kind of like let it play out. Okay. We see that we got an initial displacement. So this displacement brought you down into this gap. Interesting. That's a common tendency with these first pushes. Sometimes they don't have the immediate follow through. You know, breakdown at 10, pulls back. Maybe you catch this long. Doubtful for me though. Doubtful. I think something like, you know, maybe start to monitor this level. If we can get above here, right, you might be able to hold something. But the idea is we want to see how it develops. And now an initial reaction here, the idea would now be to look at this gap right here. This is the gap that we want to be focusing our efforts on. We want to be thinking, what can we do with this gap? Now, our latest short entry could be about right here, but we can go ahead and say we take a short right here, right? We are, this is what? 15-minute chart. So we have a 15-minute candle about to close. Let's maybe just put our stop right here. We'll put about 50% of that opening range. Right there, yeah, about 50% of the opening range. And then we can go ahead and look to target maybe this swing low, right? This swing low, that's going to be 74 from 89. I think that's reasonable. It's more than doable. So we'll go ahead and look at this. So we see the structure is a breakdown formation, overshoot. And yeah, it hits immediately. So obviously we did have the slight bias that it was going to go lower. However, when we were not able to make a decision quick enough, we go ahead and just take a step back and see what could we have adapted to in real time. Of course, you're always going to have an understanding of what price is going to do. So when you're backtesting, of course. So I believe your backtesting accuracy should be like 90%, like 95, like it should be pretty accurate because you don't have to necessarily make every immediate decision. Now, let's see, is there any other trades that potentially form here? Because, you know, typically with the setups that I'm going to be looking for, they're going to happen at the 9:30 to 10 a.m. However, there might be a second trade that sometimes forms. So we want to be looking to see if that's maybe an opportunity here. For me, I'm seeing a few things right off the bat. I'm seeing some rounded over tops. I'm not too certain that this is going to resolve higher. The limit might be 88. So we're looking to maybe target there if there is a trade. I don't know if there's enough meat on the bone for that. So we'll have to see. Kind of play it out. Maybe this is a gap right here to target. Maybe here. Maybe. I don't necessarily think it's the strongest idea. I don't think it's the strongest idea. Interesting. So yeah, I did not think this was the strongest idea. It was just one little test of a fair value gap. Now though, we are getting continuation, so we can look to potentially trade this one right here. And we can look at this gap if we could test it real quick. And we hit it without testing it, I guess. Oh well. Maybe it tested it. I guess you can include that volume imbalance. So maybe that's your short. So if you want to, you know, get that on the book or whatever, you can go like this, boom. And we say, as soon as it touches that red line, boom. Okay, so we short this. The whole idea is you're not necessarily trying to, like, who cares what the numbers are, right? It doesn't really matter. You're just trying to condition yourself to see what are winning trades and how do they hit, boom. Okay, you can see that that is a very visceral thing. It hit. I'm not too concerned with whatever the thing is. I don't even know what contracts are on here, honestly. It's just that little reward in your brain, right? You want that rewarding sensation. So that's like the main benefit of like putting a trade on behind the idea you're looking at, because then you can see it hit or it invalidated. It's training your brain to accept the outcome. So we'll continue to watch this. We'll continue for maybe a handful more days, and hopefully this is insightful to you. So if you like stuff like this, just leave a comment. Let me know. We're going to be doing a lot more things on this channel. Just for the most part, I'm trying to make it a point to share what it is that I'm doing or what I'm going through or what I'm observing, the things that I'm doing daily to improve as a trader. So if that's the type of stuff that you're interested in, definitely subscribe, leave a comment, like, and share this video with someone who you think might benefit. So let's go ahead and continue. We're going to keep watching these charts, looking for the next 9:30 open to come around. And I might as well throw this in here. If you struggle with trying to refine your system, you can reach out. I have links down below. You can actually trade live with us. I have a couple different options of how you can work to improve your trading. Just reach out. We'll be in touch. We'll schedule a call and we can go through these things step by step. I like this one right here. So what we see is we had a sweep of the London low, right? Midnight open low, London low. We're also inside this inversion right here, and we stabbed down, right? This is data, obviously. I think that goes without saying, this is a data candle, but it also left a very flat top. So this characteristic right here, it is indicative that we might trade back to the other side of the range. Now let me go ahead and check. We actually do have 30-second charts available on TradeZella. Very nice feature. I was unsure if we did. So with a trade like this, man, how do you get positioned? It's a really good question, because a lot of traders might be afraid to trade data. And now while you could potentially take an entry here to target this level, you know, from here, let's say from here to here, 8 points, yes, that's reasonable. That's commendable, right? Is there room to potentially get a higher conviction entry, more confluences aligned? Yeah, I would say so. Maybe you wait for something like this to form, right? Where you get, you get an initial base, you get a push higher, and then you get that secondary sweep of those early longs, right? This is where you're going to be placing your stop. If you're long right here, you're probably under the bodies. Boom, 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 boom. You get this little box, right? So with this little box in mind, you also see that there is an inversion gap. Now you could potentially wait for, I would say, let's, maybe this candle right here. Boom, right there. Maybe you wait for that candle. So if you enter there, you can rest assured that your trades could stay above that. That would be what you'd be hoping for. You'd be aiming for a stop here and potentially just that. That would be a really nice base hit. Maybe you look for the continuation right here. Stop there for that. Maybe take it in 2 bites. I think that's more than reasonable. Boom. And then you can look to re-enter here. Boom. Still risking partials. Another way to do it would be to trail the stop around this area. But you do run the risk of it doing what it just did prior and stopping you there. Either way, you're potentially either making that much extra or you're taking the stop there. And then, if you take that initial target, you can obviously take a re-entry. There's no stopping you there. So let's go ahead and continue, see if there's anything that forms at the 9:30 open. This is a very nice setup right here. So if we go ahead, rewind this, slow it down for the viewers, go over this trade right here. I really like something like this. So when you see me mark out a high like that and see it sweep, that's kind of the action that you want to be seeing at these highs. You want to see them kind of get ran through and then kind of just stall out, right? They just lose all enthusiasm to continue higher. That is a very, very likely sign that we will be reversing. So what do we see here, right? You get obviously higher low, higher low, higher low, and eventually you get that shift. What is this right here to us? Well, it is our signal to look for shorts. We get rounded top, rounded top, rounded top. You get your 3 drives pattern. So that's going to set you up for a potential short scenario. Now, you have an inversion right here, the gap that gets flipped, and you have a bearish gap right here. Now, I would be personally looking to, rewind the tape a little bit. Let's go candle by candle. I'm a little too slow right now, I guess. Hold on. Go to 1 minute, make it a little cleaner. One candle, one candle. So the gap doesn't even show on the 1 minute chart. It's a 30-second gap right here with this wick. However, that doesn't mean you can't take the trade, because you could potentially be looking at it like this. You don't get the gap, right? But you get displacement and you get this up candle. This opposite candle in the trend tells you something. This right here is your retracement. So how do you get involved in a continuation? You trade when it breaks below that swing point. So you could potentially be looking at it like this. Right here, go one candle. Now you would be getting short right here, boom. And your stop, you could put it above, you know, right there. You could put it above the body, but I mean, you could probably put it above the imbalance too. You could put it anywhere, right? Your target would be somewhere in here. It'd be somewhere in here. I'd be thinking maybe here, or if you're ambitious enough, you could probably go wick low. Wick low is a reasonable target. Given the structure and the context of the setup with us sweeping at the highs, I think it's more than reasonable for us to trade to that wick low. I don't think that low would be protected by any means. And yeah, we get that target hit. So that's the thing you want to do. You want to be watching these setups and mainly focusing on the rotation between levels. So the highs, the lows, how are we shifting our focus from the bullish to the bearish scenario, and so forth. So with that being said, we'll continue for a couple more examples. And mind you, I'm doing all of this off the cuff. It's all about pattern recognition. So right here, you can see, you know, sweep of this low, right? I want to be looking again at just a few key pieces of information. I'm mostly focused on reactions versus like midnight open. Are we trading above or below? And right here, we're getting, what is this? Just a PM kind of, or midday rally, I guess you could say. Yeah, quite a move. So now you want to be on bigger days, potentially looking at the daily chart. So we see that we put in this swing, the sweep of prior day low, and now we have this level right here, the daily chart. So I'll be looking at this. That'll be my main focus. I want to see how we're going to react to this gap that we mentioned here, 65. Especially as we get to midnight open, we're coming close. Yeah, quite the mover right here. So we're seeing a pretty flat, you know, post-market into Asia, into midnight open. Right here, pretty flat on the 15. So the question is, what are we going to do here? This is a Thursday, September 12th, okay. Boom, boom, boom. Let's see what we're doing during London. Okay, it's kind of stalling, right? It's kind of sideways, kind of choppy both ways. This is not a high probability session right here by itself, I don't think. But you see this right here, interesting kind of top formation potentially. So you want to be thinking, what are we doing here? And then what are we doing here, right here as well? This is our daily candle. So how are we reacting to the daily? Are we going to fold into the previous day's range? You know, looking at this right here, do we fold in, or are we going to potentially look to displace above this gap? So you have really two targets, like here or here in a broad sense, right? We get more information as we go, but that's what I'm looking at currently. So let's kind of continue. See where we're at. We're about 5:30. Very, very, very sideways range right here for Asia, for London. And yeah, we just keep watching it. Watch as it develops. Get more information as we go. This right here is just a ball of consolidation. So eventually it's going to break one way or the other, right? And right here we see that on data we did in fact sweep that Asia high. Sorry, again, that London high. And from there, we look to trade lower. So this right here is going to set the frame for the day. More than likely, I would say it's reasonable for us to expect to trade down to at least maybe right here, or let's just say right here, somewhere in here. Do that one. So somewhere in those lower levels, right? You see that we initially rallied, right? And then we respected this imbalance right here. So we'll go ahead and annotate this. So these are a couple reference points. We do have that wick high. Is it possible for us to trade to this wick high? Nothing's outside of reason. We want to see how are we going to accept price at the open, because now we are approaching these lows. We have yet to sweep them out, right? And we have like 30 minutes till the open. So we want to keep a couple things in mind. Number one, we have this bearish gap above. Don't be deceived by the color. We'll go ahead and make it red. We also have this swing point right here, and then we have that data high. So we're seeing pretty muted action. See how it's weaked into the lows? Here's the open right here. So we do not want to get trapped in a bear trap. We don't want to necessarily short the break, right? See this hammer? We have 2 minutes left in the candle, so we don't want that to close super strong on us. See how it flips right here? Now, it's at this point that we could potentially be considering some sort of entry. And you see it just kind of breaks down. It breaks down without any immediate entry. So again, when you see that kind of thing happen on your native time frame that you're looking at, the 1 minute right here for us, we want to kind of scroll back and see, was there any other indication that we could have potentially traded? I do really like this candle right here on the 5 minute chart. We'll go ahead and annotate that little opening price right there. We'll look at this in a, let's just make it a teal, right? Make this real bold right there. So the break below this level, you could actually look to short that, right? That's a potential. So we'll kind of rewind the tape, see what we see. So on that closure, right, you get this next candle and it comes up and it references this. So this was important to note because in the initial reaction here, I did not observe this breakdown. I only observed it start to wick higher, which actually provided a pretty solid short entry. So this would have been your trade right here. If you want to rewind it again, this would be your trade. You'd be looking at it kind of develop, boom, 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 boom. You get that order block that's forming. It confirms right here. So you could back it up one candle. You'd be looking to get short right here. You probably put your stop loss, I don't know, maybe right there. And again, we base our targets on structure. So we could go maybe right there to fill that little 15-minute fair value gap. And then you kind of just let the tape work. So you let it play it forward, boom, boom. And then it takes you out. So that's the delivery of price. And here, very important to note, because we are targeting structure, right? I said this swing point right here. And it appears that that's as low as it wanted to go. So in this scenario, maybe there was a secondary trade right here to trade back into the range, right? Because, you know, if you have this pretty dominant daily candle right behind you, it doesn't necessarily mean we're going to flip completely bearish, but we can trade from the external to the internal. That's always a very reasonable scenario. So just a quick video today, kind of going over some stuff regarding backtesting. Hope you guys enjoyed. If you have questions, definitely leave them below. If you have suggestions, leave them below. If you have anything to say, leave it below. Until next time, see you later. Take care.